What's up everyone and welcome to today's new video where in this one we are covering my personal model, how to trade it and what we can expect from this model. Now I call this model the one shot one kill and of course it is by me. I've received multiple payouts from FTMO and different companies with this model and I think it is the most simplest, most effective model you will probably find. If you do enjoy this video, remember to subscribe, as most of you who are watching the videos are not yet subscribed, and please do drop a like. So diving straight into the model, we will get started. Now, the first step of the model is incorporating the technique of swing highs and lows. So a swing high or low is a 3-candle formation like we have here, and it is where the middle's candle high has a short-term high to the left of it and a lower short-term high to the right of it. So both short-term highs on either side need to be lower than the one in the middle, and that creates our swing high. And of course, vice versa for a swing low. Now, the first step to the actual model is that a swing high or low must be taken out, which is tricking retail breakout traders into the market. So the logic behind this wick here, which takes out the swing high, the logic behind this happening here is that retail traders see it when the candle is at this point and it's a big bullish candle, and they want to buy it when it returns back to this price point. However, we know as ICT traders that they are liquidity and we want to drop to a lower time frame to look for an entry like I've put here. Diving into the second step of the model, and this is actually our entry, how to navigate it and how to actually find our entry. So as you can see down here, we have a higher time frame swing low, which we traded into and then moved away from. Now the first step to the model, which I actually forgot to write down here, but the first step is we look for a break of structure here. As you can see, as we trade into the swing low, we leave a high and then dip down into it. We then expand above the high, which gives us our break in market structure, and leave a fair value gap inside here. Now this may look familiar to those of you who have watched the 2022 mentorship by ICT, and he tells us to buy from this fair value gap inside here, as this is the best entry to give us the highest risk to reward. However, over the years I've been practicing this and actually trading ICT concepts myself, I have found that this model or this entry is actually one of the lowest probability ones in terms of I will win about 60% of the time and then lose 40%. And a lot of the time I'll find myself stopped out quite early and then the move goes back in my direction. So what I do with my model, the one shot one kill model, requires us to ignore the first 2022 mentorship entry, and then as we expand higher and break another swing high, we then enter off the next valid entry. So in this case, most of you would usually take the 2022 mentorship entry, which is this. However, I wait for that to occur, and once that is validated and confirmed order flow in the buy side direction, when we break above the swing high here, we then wait for a return to the fair value gap or order block, in this case fair value gap. I would buy it from there, and then price runs up above the equal highs, and there's a higher time frame drawing liquidity to the upside. So just by doing this, a lot of the time you will find that when you take a buy from this position, a lot of the time we will run lower and then actually take out your stop loss before moving up. However, with waiting for the second leg here, we have confirmed that order flow is in our direction and we actually do want to move upwards before taking an entry. Whereas this one is a lot more lower probability than this one. So that is why I wait for price to expand the second time and then come back to an order block or fair value gap like I noted here before taking a buy or sell. Price then expands quickly after tagging the first entry and offers one more before running to our target. I do prefer to use order blocks for this rather than fair value gaps, but you can use both. I just like the order blocks because when we expand 3 times of the order block, I like to see a deeper retracement into the order block and then we buy from there. We execute these on the 5 minute, the 3 minute, or the 1 minute. Now, I don't use the ones in between, like the 4 minute or 2 minute, just because I've found these to work for me best. And when you're dropping down from a higher time frame PD array, these are usually the most cleanest. I mainly use the 5 minute and the 1 minute for them. And if you are quite new to ICT concepts, I would definitely recommend using only the 5 minute, as this gives you much more clarity and much more time to actually see the entry form before taking the trade. Now, moving on to an example, I just want to show you some quick examples to actually go over the model itself and show you it in practice. So as you can see here, we're on a 4-hour chart on Euro USD, and you can see we have a swing low here. Why is this a swing low? Because we have a short-term high, or a short-term low I should say, and then another short-term low either side of it, creating our swing low. Now we run up and then we come down and tag this short-term low below here, putting retail breakout traders into the market and taking their stops. We then expand up and then our buy side liquidity rests up here. We are going to zoom into this bit of price action down here to try and find our entry model, the one shot, one kill model. Now, you can see the swing lows tagged, and then we expand higher. If you can't find an entry within this bit, you can wait for the next PD array to form, and then find an entry within that PD array. So once we are trading back into here, you can be waiting on a lower time frame like the 5 minute, because this is the 1 hour time frame. You can be waiting on the 5 minute time frame for that one shot, one kill entry model to form. As you can see here, once we expand past this swing high, given our break of structure, we don't return for the 2022 model, and then we would expand and wait for an entry here. As you can see, we don't return, so I follow price up and wait for us to come into a PD array before dropping lower and actually finding an entry to aim for our draw on liquidity and buy side target. Now on the 5 minute time frame, you can see that this here, this grey box, is this 1 hour fair value gap. So on the 5 minute, we dip down into it, taking out the sell side liquidity all in here. We have accumulation and then manipulation, and then we are trading the distribution to the upside. So we take out all this sell side liquidity into the fair value gap, and then look what happens. We leave a high inside here, we expand upwards, come back into this down close candle, which is our order block, and then expand higher past this swing high. Now this order block confirms our change in the state of delivery. The algorithm now wants to deliver price to the upside and seek buy side liquidity, as we are in that higher time frame buy program. Now we have our change in the state of delivery, price expands up massively, taking out the swing high, and then this order block becomes our attention, because think, this is the first entry or the 2022 model. In this case it forms differently, but it is the same concept of skipping the first entry, waiting for that second entry off of this order block, and then we take the buy and ride price upwards. That is the one shot, one kill. That is the one shot, one kill model, and I think it is the simplest model to new ICT traders to get you on the right track. Now, some key takeaways and what you can learn from this model. We need a swing high or low tagged. Remember, this is ideally a higher time frame swing, low or high, so that we can drop to a lower time frame and then find an entry, like I said here. And remember, the most important part of this model, to increase the win rate, we need to ignore the first 2022 mentorship entry or the first entry of any kind. This could be, of course, in the 2022 mentorship form of a break in structure and fair value gap, or it can be in terms of an order block. And then we take the next order block or fair value gap entry, and that massively increases the win rate. This one thing of ignoring the first entry and then entering off the second one completely changed my win rate, and I saw massive improvements when doing this. Now this can be used at PD arrays once we've traded away from the higher time frame swing high or low. So as we are expanding to our draw on liquidity, as long as this hasn't been hit yet, we can look for this entry model every PD array until we hit this draw on liquidity. So we use it at the higher time frame swing high or low once it's tagged. However, as we're expanding upwards to the other draw on liquidity, we can also use this entry model at the different PD arrays. So that brings us to the end of the little presentation here. If you did enjoy, please do subscribe and turn on post notifications so you don't miss a video. And please do drop a like to help us boost the algorithm and hopefully help more ICT traders find this sort of content. So yeah, thank you for watching. I hope you enjoyed and learned something. Be sure to take notes as always, and my socials are linked in the description below. And yeah, I'll catch you in the next one. Thank you so much for watching.